Hello ladies and gentlemen, my name is Raymond and today we're going to go over the general excise tax for Hawaii. I'm going to start with the different surcharges for the different counties as of January 1st, 2019. Then I'm going to move into some of the differences between use tax, general excise tax, and sales tax. After that, I will go into a few of the key concepts of GET. And then I'm going to end with some of the changes that came about because of the Wayfair online sales tax case that ended last year in 2018, around July 2018. Also, as a disclaimer, I'm not a licensed tax professional, nor am I a licensed legal professional, so this is just for educational and informational purposes. A little bit about my background with GET. I've worked a few independent contractor positions here on the island of Oahu, and I've also worked with a corporation that I'm currently working with, where I filed their GET for their subsidiaries. And I've also started my own small business selling cell phone cases online. So without further ado, let's go ahead and get started. I'm going to start by getting rid of my face here. We won't be needing that for GET. Let's go to this Excel sheet that I provided for you guys. It lists right here in column A the different districts of the state of Hawaii. As of January 1st, 2019, as I mentioned earlier, the new surcharges for two different islands here, Kauai and Big Island, were increased. Kauai caught up with Oahu, 0.5%, and Big Island increased to 0.25%. The state is 4% across the board. No matter where you are in the state, it's going to be 4% from them. One little side note here, though, part of the surcharge is collected by the state in the form of a fee from each county. This is because all of this information, all these taxes, are collected from one website. So when you go to fill out your form, it'll all be on one website, which I'll show you here in just a moment. All right, as you can see here, you got the total here between the state and the county surcharge for Oahu is 4.5. And what you're allowed to charge the customer on Oahu is 4.712 in GET. If you've ever shopped on Oahu and looked at your receipt, sometimes it will say sales tax. That's actually a misnomenclature, word of the day there. It's not quite the same as sales tax. The primary difference for those of you that will be paying this is that the state, if you're working in Oahu, will charge you 4.5% GET on the 4.712% that you collect from your customers. So for an example here, let's say you sell $500 worth of goods to a customer. Then you're going to charge the 4.712% that you're allowed to charge by law, bringing the total to $523.56. And as you can see here, the state will charge you 4.5%, which equals 23.56. And simple math here, you can tell it brings you right back down to $500. This is the sales price, and this is the money that you're in business for in the first place. You don't want to be making a profit on the taxes because that is illegal. So as you can see here, the difference between sales tax and GET is that sales tax is more of a pass-through. So whatever the customer pays in sales tax, assuming you charge the customer the full sales tax, that's what you're going to pay the government. The government here in Hawaii is going to actually charge you on that quote-unquote sales tax, which is actually called GET here. Now, use tax, as I mentioned briefly earlier, the difference for that one, and I will show you in more detail later, is that it's like a sales tax kind of that you would pay on an imported good, basically, or a good or service that you might have agreed to pay on behalf of the vendor. Let's go ahead and go into one of my accounts here. I actually have two, one for my LLC and one for myself. Something to note here is that in the state of Hawaii, your GE license isn't just your tax license, it's also your business license. So if you have multiple LLCs, you will probably want to get a different GE license number for each one. So let's go ahead and sign in. Now here you'll see at the bottom the G49 form that you will fill out annually. This is usually due on April 20th, but if the 20th falls on a holiday or a weekend, then you will just file on the next business day. And before I go into the G45 here, you'll notice right here that my business is required to file semi-annually. The way they determine the frequency is based on your revenue. So you'll see here that anything less than $2,000 in revenue that your business incurs or you as an independent contractor incur, you're permitted to file as frequently as you like. You don't have to stay stuck in the semi-annual. If you want to do monthly, you're more than welcome to. Quarterly, anything less than $4,000, and then if you make more than $4,000 then in revenue, then you have to file monthly. It's required. And once you file quarterly or monthly, there's no going back to semi-annual, or if you're filing monthly, there's no going back to quarterly, really. Perhaps if you dissolve and reinstate, I'm not sure how that would work, but that's the only thing I could think of at the moment. So let's get back to my online account here, and we'll start on this G45 here. The G45 will be the one that you fill out semi-annually, monthly, or quarterly, depending on your revenue stream. Let's click. Normally, when you're going to file, you'll see a red triangle right here. The only reason you don't see one here right now is because I'm actually early. I don't have any taxes due or any filings due. Another thing to note is even if you have a 0 return, you still have to file at the frequency they tell you to here. Let's get started on this return. You just click next on the first screen. So far, my Tinkerton, which is my company that I started to do online sales with, in this case, so far I've only sold cell phone cases online through Facebook Marketplace and Amazon. I've only done it from Oahu, or I've used another state, which I will show you how you would record that here. And I just kind of want to point out here that do you split your gross income with another licensed taxpayer? This part sounds like it might be self-explanatory once you jump into it, but I've never actually done it myself. So I just wanted you to know I didn't ignore it. I just don't know that much about that one yet. Do you have any exemptions to report? For argument's sake, I'm just going to click on it and show you what it looks like here, because this column B here will not populate unless you click yes there. This right here is going to be the wholesale page, which I will actually come back to because it's pretty important for a lot of you 1099 contractors too, not just those of you selling products. Right, here we go. As I said before, I sold on Amazon some cell phone cases. Let's say, for example, I sold $400 worth of cell phone cases. Let's say 300 of those were sold, or $300 of those were sold outside of the state. That will be tax deductible, GE tax deductible, and considered exempt. So I would just pay the GET on $100 here. Those of you that are in real estate, say you're renting out some real estate, these would go here, and any type of subleasing deductions you might have, these are things you'll want to look into because I'm not 100% sure on how these work, but I know that some form of sublease deduction is out there. Another thing for those of you that are 1099 employees of places that tip, you will want to add your tips here. You will be charged the full 4.5% here, at least in the county of Oahu. If you're on Maui, then it's still 4%. Big Island is 4.25%. But what you may not know is, let's see, I was a massage therapist and I've also delivered the food for a different company, and they charge their customers GET on these sales. So I thought I was exempt, and then there was a time where I thought that I had to pay the full 4.5%. I just didn't know what to do, so I ended up emailing the state and asking them what I should do. And what they told me was that only the tips are to be charged the full 4.5%. As for the rest, if the business owner that I was contracting with decided to charge their customers GET, then I would only be responsible for this, the wholesaling services, of only 0.5%, which is way better than 4.5%. And if I'm not mistaken, I believe this will also apply to most of you Uber and Lyft drivers out there as well if you're 1099 employees. All right, going back to my cell phone cases, if you're selling products, they recommend that you ship them to yourself first if you've never worked with the manufacturer before, and that's exactly what I did here. So I shipped them to myself here in Hawaii, so I had to pay this 0.5% wholesale fee just because it touched the land here in Hawaii. Something to keep in mind, because if you were to just send it from, say, China, in my case, directly to Amazon FBA, and then everything would be shipped directly to the customer from there, then you could very well not pay any GET on it. However, you would still want to consult with a tax professional just to be sure. Alright, and for the 3 of you out there that might be selling insurance and watching this video, I'm going to take you to this screen. You guys actually get the best rate. This is 0.15% GET rate for those of you that sell insurance. This was pretty nice. I remember, I believe it was my first year because it was towards the end of the year. I only had to pay 50 cents for my GET selling insurance. Okay, so let's go back to this screen again. This right here, the land value of imports for consumption line. This is where you would put your use tax, use taxable items. And for that, I'm going to go to my Excel file here. The land value is the value of the item by the time it reaches the state of Hawaii. So shipping charges, the cost of the item itself, and any kind of import fees or anything like that, customs fees, those would need to be added to the use tax line. Didn't quite believe that myself at first, so I just made sure to look it up here on the website. And sure enough, right here, you may want to pause it after I finish highlighting here. Right in this area here, it'll let you know exactly what's going on with that. Alright, let's get back to Excel here and website. Other things on use tax. If sales tax is charged, sales tax is a deduction for any of the items that you bring here to Hawaii. A couple things you want to check out. If they don't have a physical presence here in Hawaii, you'll want to look online to see if they have a GE number. The way you do that is you go back to this website again. Let me sign out. You'll just want to use this cool little search feature right here. Let's say, for example, that we're doing business with a new vendor that we've never heard of called the Home Depot. Sometimes you'll have to use the DBA name field here. If nothing pops up here, sometimes it'll pop up if you use this one. In this case, they have multiple. Makes sense because they're a larger corporation. The main thing you want to focus on here is that the status is open, or that they exist at all in the state of Hawaii. If they do, then you're not responsible for paying the use tax on it unless you've set up a contract with them saying that you would pay the use tax. And up to a certain limit, and we'll go over that in just a minute with the Wayfair effects. Let's go back to Excel. Now, along with all these reasons to pay tax, there's also a pretty hefty list of exclusions and exemptions under the Chapter 237-24 tax code or tax law, which you could probably better find through a Google search. I will try to find the link and attach it to the comments below. Another item I briefly touched on was this out-of-state sales tax exclusion. So if you're paying out-of-state sales tax of more than 4% for the state or 4.5% for state and county of Honolulu and county of Kauai, then you get to subtract that as an exemption. If, however, you're only paying, say, 3% in sales tax for a purchase, then you'll still need to pay that 1.5%, at least in Oahu. And I also just noticed this should say on the islands. Another thing to look at here is the expense reimbursement. Say you have a consultant come in to help you improve your business. They're going to need lodging and airfare and food, and many times they expect you to reimburse them. Now, reimbursements are usually for items that have already been charged, either GET or sales tax, and don't need to have GET charged to them. However, I've noticed in the corporate world at least that many of them still charge GET for these services, or I'm sorry, for these reimbursements. Technically, they can charge GET on it if they treat it as revenue. However, they're not required to treat it as revenue. So if they just treat it as a pass-through, which you'll just need to talk with them and let them know that the situation and that they don't have to charge GET on it. Sometimes they still want to, which has always been the case when I talk to a vendor because I know they're dealing with a larger corporation. If you're a small business owner, then you would probably want to just talk to them and ask them if they can fix that for you. They will need to break it out from the rest of their invoice though. So if they have an invoice with all of it jumbled together, then you'll just have to ask them to create separate line items for the reimbursements. It can just be one lump reimbursement fee, or preferably they'll break down the different reimbursements. That way you know for sure that you don't need to pay GET on anything. And an even better way is just to invoice you separately for the reimbursements. Alright, and for the Wayfair online sales tax case that was going on last year, 2018, I mentioned earlier that sometimes a supplier and a customer will arrange an agreement that the customer will pay GET on the vendor's behalf. However, with the Wayfair agreement here, if you go over, or if the vendor goes over $100,000 in revenue from the state or 250 transactions with the state, then they are required to file for a GE license and then start filing their own returns. So that will trump any agreement that you already have with your vendor to pay GET on their behalf. Or as it's called when you pay it, use tax. If they have met the $100,000 threshold or the 250 transactions threshold and they still don't have a GE license on the state website, you'll probably want to go ahead and just let them know that they probably need to get a GE license, and that's usually what I do. I just send out a letter to their tax department. And if they still don't get a GE license number, then the thing is you will still have to pay use tax on their behalf. The reason why is because the way the state sees it is you are closer and more accessible, and you already have a GE number, hopefully. But even if you don't have a GE number, if you're here on the island, you're more accessible. Many times what will happen when they realize they should have had a GE license all along is they will go back and look at your invoices and try to charge you back GET, which you've already paid use tax for. So just make sure to keep good records of the use tax that you pay on their behalf. Alright, that pretty much does it for this video. Hopefully I've answered some of your questions. If you have more questions, please feel free to add them in the comments below. Also, if there's any tax professionals out there watching this video and you have any corrections for me, I'm all ears and I will gladly correct any misinformation I may have. Just let me know. Thank you very much for watching my video. Aloha.